This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. If you like what you hear, Planet MicroCap, please take 2 seconds to give us 5 stars on Spotify or Apple. This really helps others find the show and join in the MicroCap conversation. I'm excited to announce that we have opened up registration for the Planet MicroCap Showcase Toronto in partnership with MicroCap Club, happening on October 21 through 23, 2025 at the Arcadian Loft in downtown Toronto. If you're a MicroCap investor or enthusiast, you don't want to miss this event. Visit planetmicrocapshowcase.com to register now, and I'll see you in Toronto. My guest on the show today is Cameron, founder of Commonsense Investing and author of the Substack, microcapstocks.substack.com. Cameron is a microcap investor focused on education, community, and a disciplined research process, bringing a common sense approach to navigating this often volatile corner of the market. In our conversation, Cameron shares how his investing journey evolved from chasing high flyers and exposing bad actors to building a thoughtful framework for identifying quality microcap companies. He discusses the importance of doing your own research, filtering stocks through a rigorous process, and why flexibility is a powerful edge for retail investors. We also talk about his personal investing experiences, as well as key red flags to look out for, from share dilution to questionable management behavior. And for full disclosure, we discussed a number of companies during today's podcast. I'm not a shareholder in any of them. Thank you again for tuning into the Planet MicroCap podcast. Please enjoy my conversation with Cameron of Commonsense Investing. Cameron, thank you for joining me today. How are you doing, man?
Yep, thanks for having me. Doing good. Doing good today. It could change with microcap stocks depending on the day, right? But today's a good one.
Yeah, look, it's a day by day, week by week, month by month process. It's just a matter of, take a deep breath and we'll see what happens. Or just pick good stocks. And then, you don't have to worry about a thing.
Yeah.
Or sort of. At least have good conviction and do your research. But anyways, Cameron, look, this is, I sound like a broken record. I say this all the time, but it's been a long time coming. I've been following your stuff for a while. You have your YouTube channel, you have your Substack. You also did an incredible series, unsolicited. It was super awesome on Planet MicroCap Showcase, where you put out, a bunch of previews for all the companies that were presenting. So I invite everybody to go check that out. It was really cool, and plus some of your reactions, everything like that. So firstly, thank you for that. That was yeoman's work for sure.
And no problem. That helped me too. Right. So it's we work together as a microcap community. And, hopefully, like, part of what I wanted to show with that is that research pays off. Right. When you look at 100 stocks and you could find that what you think is the best 20 or so, that's where the real returns are. So it's fantastic that events are happening. And thank you for putting those on. And then also, I just want to show people that putting the time into microcap stocks can make you money. That's kind of the point of it, right?
Absolutely. We were just talking offline, microcap. I mean, investing in general is a team sport, but in microcaps, I don't know what's the step above team sport. Just we all live together and continue to play the same sport every day, I guess. I don't know.
It's getting there, right?
Yeah. But look, and also it also just shows the value of, like, if you're going to go to an event, it's just super helpful to actually do your research. Yeah, you want to go have fun, have a good time, but it also helps when you're kind of a little bit more prepared going into an event and being like, all right, there's 100 companies here. I need to kind of suss out which are the ones I want to give more time to, or maybe take a one-on-one with and whatnot. So that was very a helpful resource in that respect.
It's all about education. Like you already touched on it, as far as, like, we're not in competition. I feel like too many, especially new microcap investors, start in the space and I'm going to discover a stock before anybody else, and it's going to be my stock and it's going to make me a millionaire, when really these education, being able to go to Planet MicroCap in Vegas and get education from the CEOs and the companies themselves, but then to be able to discuss that with other microcap investors who may or may not have different opinions on the same stock. And that's the real things you should be listening to. Not only people that agree with you, but people that disagree with you, and why. And being able to have those conversations.
100%.
That's how we're all going to make it. I don't think you can make it microcaps without having that mindset and having that willingness to do that, right?
Oh, yeah, for sure. To be fair, I very much want to continue to encourage those young and hungry bucks out there to, oh, I found this one before anyone. Like, sick, share it with us. Come
Yeah,
on, we would love to know what you think. Come
yeah,
on the pod. Let's talk about it.
yeah.
But, Cameron, so like I said, known you for a while, wanted to showcase to our audience a little bit more about your background and how you got inspired to look deeper and start investing and looking at microcap stocks. So where did the inspiration start? How'd you get into investing, and then specifically microcaps?
Yeah, it's a long story. I'll try to condense it to the funniest parts. But like my father, I'm pretty sure my father was a degenerate microcap investor. And my story goes back to the days where when I was like a really young teen, he took me to the bank and we bought shares of a stock back in the days where they actually gave you shares, paper shares of a stock. And we went put that stock in the closet. And years later down the road, we went and pulled those shares out of the closet because I needed to go pay for college. I was about second year college and running out of money, and I cashed out on shares of TELUS. And looking back on it, I always tell that story about how my father kind of educated me on investing. But that was back in the days of like, I'm not going to talk about what I'm doing or why I'm doing it. I'm just going to do it. You're going to watch me do it, and you're going to learn from that. And one of my viewers came out and said, that can't be true, Cameron, because TELUS did not exist when your father bought that stock. And that made me go back in history and look at it, research, and go back to my subscriber. You're like, you're right for calling me out on this. I'm pretty sure my father bought a stock. Maybe it went up and he sold it, but more likely it went down and he had to go back to the bank and buy a different stock. And so when I went to go cash it out as an older person going to college, he all of a sudden I magically got these shares of a safer stock in TELUS, right? So it started there. One of the reasons I have my channels, some of the frustration afterwards, because what happened afterwards is you go to invest back in those days and you're always told that you shouldn't. It's too risky. You don't know what you're doing. Don't invest. Let the banks, let the financial advisors take care of your money. And you're like, oh, they scare you into like, okay, you're correct. I'm going to give you a bunch of my money. You're going to charge me for doing what you do, and you're going to give me returns that underperform the market. And you kind of go through that cycle of like being afraid to invest until, obviously we started getting into the time period where I started getting back into investing right around, I think it was 2009. And that's really when they started talking or presenting online investing. I remember it was $9.99 a trade, which with inflation now is like $25 a trade, right? Could you imagine every trade you make today is going to be 25 bucks? Like how much research you would put into every trade. But back then that was huge because I didn't have to go invest at a bank, right? I could just go to my computer, this newfangled computer thing, and started investing again. And I got addicted because I got into Canadian Solar, CISQ. And if you look at the history of that stock back in like '09, it went from $3 to $30, back to $3, up to $40. I was addicted, right? At the time, it was mostly complete luck. I bought at the right time. I sold it pretty much the right time. And I was like, what is this tiny little stock making me 10 times what my financial advisor has made me in the past 10 years, right? And I started really getting into microcap stocks then. But then we get into COVID where my frustrations from when I was a younger man trying to invest and being told by banks and financial advisors, don't do it, it's too risky. We got into COVID, we almost saw the opposite of that happen, where it was so easy to trade, it was so easy to invest that everybody was doing it, nobody knew what they were doing. And I was like the grumpy old man screaming at my television, well, mostly screaming at my cell phone, watching YouTube videos of people like promoting these absolute garbage stocks that are out going to the moon, and people are making money. But then, all these terrible investment strategy and advice like just hodl forever. It's going to go up. You're going to become a billionaire. And then I'm screaming, old man screaming at the television, watching these people hold these shares. Normally, new investors and vulnerable investors that don't know what they're doing hold these shares, and they're going down 90%, 95%, 99%, going to zero. I have some stocks that went to zero. And I saw that play out through COVID. And so I actually opened up my first YouTube channel in like April of 2022. And if people watched me back then, it was actually for exposing bad stocks. My intention wasn't to be sitting here and presenting good stocks to people. It was exposing bad stocks and showing people how to read financials and look for the warning signs in the financials of, management taking insane amounts of share dilution or all these related party transactions, or go take a look at, the stock options and the warrants and who owns those and why. And I was showing people all these terrible stocks. The problem is that got me attacked. People didn't like it. They blame me for them losing money. I got letters from lawyers, cease and desist, right? And I ended up finding out that people are making a lot of money in some of those stocks that are going up significantly through promotional activities. And I ended up, my entire channel got canceled. So it was actually Christmas night, Boxing Day morning of 2023. I get an email from Google saying your channel has been banned forever from YouTube. I had no other platforms. I had no other place to go. I just started on Twitter/X at that time.
I think I remember, actually, now that I think about that. Yeah, no, I remember. I don't want to name, but like other folks I remember following were like, hey, help out Cameron. His channel's getting shut down or something. And I wasn't a big follower at the time. I just remember seeing it being like, what the heck is going on here?
My channel back then was larger than it is now. I had 6,000 people, but it was my only platform. I had 300 people on X. I had a 6,000 person following on YouTube, and they just gone. Toast. Everything.
And it was just from people reporting it, probably, I'm sure, right? Like, obviously, you don't
bots.
Yeah. Well, it's crazy.
Yeah. So people report it. They just take you off YouTube. So all the cease and desist letters didn't work. All the threats didn't work. Trying to dox me. People tried to find where I live, where I work, get me in trouble, right? All that kind of didn't work. So eventually they just took my channel down, and I went from 2 years of work just gone, right? Mm-hmm. And so I looked at starting it back up, but I was like, you know what? You can't keep doing the same thing, because, what's that saying? It's idiocy to do the same thing over and over, and expect different results. So I thought, well, this time I'm going to have to try. If I can't educate people about what a bad stock is, let's try to educate people on what a good stock is. Mm-hmm. And so since, after having about a week to think about it, right around Christmas time, which sucked, I restarted my channel in January of 2024. And instead of kind of more exposing the bad stocks, I've been more focused on, hey, let's take a look at what makes a good stock. Let's go in the other direction. And that's been slower. It's amazing how a lot of people love watching, they won't like to watch it, but they will watch exposing this bad stock. But, if I make a video on this, $10 million market cap company that's growing 10% a year, that's not very exciting, right? But I have noticed, it's now been, a year and a bit of that. And I think in combination between like myself, but also Do It Planet MicroCap and MicroCap Club and Small Cap Discoveries and Geo Investing and Keystone putting out content, I think it's working. I think the whole, collection, Wolf of Oakville, the whole collection of MicroCap investors are starting to make a dent, where my entire intention was, when we get a new investor, what I saw through COVID is they would get sucked into a promotion. They would invest all their money in some pump and dump and lose it all and then leave. Gain an investor, microcap investor, and then we lost a microcap investor.
Exactly.
The whole intention of my platform is like, how can we keep those people? How can we show them that this is a place where you should be? And if I can't do that by pointing out the bad stocks, I want to do it by pointing out kind of good stocks, right?
For sure. And, it's interesting. I mean, it's important to have whistleblower type services out there. It is important to have, the short reports, to call it out, because I mean, at the end of the day, from, we were chatting offline about this a little bit, in terms of free speech and just to also help folks from a differential insights perspective of, hey, instead of just having the main tunnel vision, you might want to better understand, well, what is this person saying? Why are they saying this? What are they finding that, might lead to this company that you're invested in? Maybe you just didn't think about that. These are all important things that you should at least when you're putting your thesis together to better understand your risk management, better understand what could go wrong. It's my favorite question I ask every CEO when I do an interview with them. It's like, hey, how do we get effed here? Please, like, can you please tell us that now so that we don't have to find out later? And it's tough. It's tough when you want to build a monetizable platform to do that, because you're gonna get those folks, and I mean, it's just tough, And I mean, at the same time, like you want those services. There's a couple folks that are doing incredible work that are actually, that are making money in doing that. But at the same time, it's like those companies end up the ones that are doing the promotes and whatever. Like they end up kind of going away usually, at the end. So it's like we could call them out all day, every day. And, but it's also part of, unfortunately, the learning lesson for a lot of new investors in microcaps. It's just, you see one, you're like, wow, this is the most amazing. Like it happened to me. I was a sucker to that early on. I can point to probably every single microcap investor I know has a story like that where they got suckered into something where they bought the hype, and it's part of it.
That's the nice thing, though, now is that they shouldn't have to.
They shouldn't have to. No, of course.
Exactly. And with all of our platforms combined, if we can be a safety net, catch those investors. So, because you're right, we all have that. Even now as an experience, I warn people, one stock a year I put on YouTube is going to go to zero. It's just going to happen. That's the nature of companies, right? It's all, so we don't need to force the issue. But, I mean, it's a great idea. For anybody watching this interview and is like wondering, I like what Robert's doing, I like what Cameron's doing, I want to get on social media. It's an opportunity because I am not doing that exposing stocks anymore, even if I could, because it is a bit more negative from day to day. I was waking up grumpy, I was going to bed grumpy, and that stock, everybody's arguing with me that stock is great, and I know that it's not great, and so it's too negative. But nowadays with AI, I mean, you can put out a Substack that is completely anonymous. You can make YouTube videos that are completely anonymous for TikTok or anything else, and you can still educate and expose some of these bad companies and what they're doing. And, but my recommendation would be to try to stay as anonymous as possible, at least until you're a larger platform, you realize you love doing this, yada, yada, maybe have enough money for a lawyer kind of thing, right? Like, there's opportunity there, though.
And not only that, and also like we do our best here also, and like in conversation with you, I've had many conversations with many folks over the years of just like, hey, what are some red flags? Like, what are things that you don't want to see? And it's also just, take that next step. Think a little more critically of like, okay, what are we saying? These are the things we're looking for. This is what things that most, quality microcap investors are really looking for. Think the opposite. If you're seeing the opposite, red flag, boom. Like just maybe think about that before, everything. But, getting into your strategy a little bit, you talk about now, the channel is really focused on good stocks, doing the background research on you. Your focus is really, you utilize your own version of CanSlim, or we could talk through it. You could either just, straight up CanSlim verbatim, or, your own version. But, love to learn more, why CanSlim? Why did you utilize that investor strategy? Why did it speak to you? And how have you maybe, I guess you'd say, mutated it to fit your own philosophy and style?
Well, I think that's, I think I'd even back up a little bit, right? Because CanSlim is getting into that philosophy, and that's from the book right there, How to Make Money in Stocks by William J. O'Neill. And it's interesting because in that book, literally, Mr. O'Neill says, don't invest in microcap stocks, I think several times. And here it's like the Bible for microcap stock investors. So it's an irony there. But I think even backing up a bit, because we're not in competition, but I do see my niche here is like, we have so many fantastic microcap investing groups out there, like Microcap Club, Small Cap Discoveries, and Keystone. The problem is, a lot of these are paid services, and for newer investors who are kind of in between, like just getting to this point where they think about investing in microcap stocks versus, hey, I'm willing to pay $1,000 or $2,000 or $3,000 a year for a service. That's kind of my niche. So I try to keep everything simple, until you get into some of my paid content. But essentially, even before CanSlim, I joked around in my recent Substack article because I've been trying to write a book about microcap investing for about 18 months. And it's hard.
I saw that, yeah.
Yeah. And it's hard because actually people assume it's all about stock picking. It's not about stock picking. I'm a big fan of like the 80-20 rule. And I would say that 20% of success in microcap investing is actually the stocks and picking the right stocks. About 80% of it is kind of strategy. And a lot of that strategy is who we are as a person, who we are as an investor. Are we patient? Are we not patient? Do we have a bit of ADHD? Do we always got to be doing something, or can we just walk away for a year and be happy? Like, we really have to look at ourselves to figure out what type of investor we are before we pick a strategy like CanSlim, because there's all kinds of different strategies out there that you can use, right? So like I was talking about it, if I had to write down simple rules for picking a stock, right? You need growth. That's number one. And if you go to Ryan Telford and his quant analysis, basically 90% of every microcap stock that is 10x ever has always had really good sales growth. You need growth. And then beyond that, are they profitable? Are they close to being profitable? Are they good with their money? Do they have a good balance sheet? Do they spend money like crazy? Do they spend shares like crazy? Like, there's a few very simple factors that we could look at to sit back and say, that's a good stock or not. And again, following that 80-20 rules, that's kind of what I do, is just using those very simple criteria. I'll research 100 stocks. And again, this is where retail investors have our advantage, because it's very much a space where the more time you're willing to put into it, the more you're going to get out of it, hopefully financially, right? But I'll research 100 stocks. 80 of them will be according to my simple criteria of growth and profitability, or close to profitability, and a somewhat competent management team. 80% of those will be no good. I'll be left with 20%. 20% of 100 stocks will be good. And that's typically what I'll present on like YouTube, right? I've done my research. I've gone through 100 stocks. Here's the 20 that I think are kind of good. I'm going to now present that to you investors, and you could do your own research and make your own decisions. But if you go deeper on that, like you're left with 20 stocks or 20%, I now do deeper research on those 20 stocks, and I'm left with 20% of the 20%, meaning I'm down to 4%. Out of 100 stocks that I started out with at the beginning, I'm left with 4 stocks, right? These are ones I might invest in. This is the 20% of the 20%. These stocks aren't good. These stocks are probably pretty good. And then within that, if you continue down the road of 80-20, within those 4 stocks that I invest in, probably one will make me significant amounts of money. So if you go down that rabbit hole before you even pick an investing strategy, it's kind of a mind shift for some people, right? Where this isn't necessarily an easy space. I've seen a lot of like even experienced investors come down to microcaps and lose money, because previously investing was going on Seeking Alpha, reading a bunch of opinion articles and deciding which opinion they agreed with. In microcap stocks, you have to dig into the earnings, you have to do your research, you have to have your criteria, and you have to almost put all the stocks through the filter until you get down to just the best of the best of the best. And I compare it to poker. One of my favorite investors is Matthew Martin from Ribmont, and he started out as a
Montreal Mafia right there.
Yeah, absolutely. Right. So that like we agree on just about everything. It's all about, you're never going to be 100% right. You're always going to have that stock that's, pocket aces, and you end up losing the hand. But you put yourself in more positions to succeed than not, and you're not always going to win that world championship series of poker. But if you keep putting yourself in the best position to succeed over and over and over by doing that research, filtering out stocks that you don't want, getting down to a narrower range of stocks that you do want, then it's more likely on a balance of probabilities that eventually you are going to succeed, make money, and crush the market. So that's kind of the basis of my investing philosophy. Isn't necessarily like one strategy or the other. It's mostly research.
Mm-hmm. Common sense.
Commonsense Investing. Yes.
Common sense. There you go.
I still haven't gotten any money from Donald Trump and or the conservatives in Canada. I mean, I created this long before they started using common sense. So
of course.
Where's my licensing fee?
My goodness. And well, at least you got the .ca, Yeah. That's always helps. So when you're going and looking at the 20% of the 20%, maybe those 4, maybe one of them is great. The 4 are pretty good. What's when you're getting from that the initial 20% and then down to the second 20%, the 4. What's some of that next level type of research and just checklist boxes that you want to see checked that differentiates the 20 from the 4?
20 from the 4. I think for me, I'm a blend of, I am a little bit more of a quant investor than qualitative. Again, for me, I create a lot of discussions about who you are as a person and who you want to be as an investor. Because we'll see some investors that are way more qualitative, and they just speak to management, and the numbers are important, but really it's I'm talking to management every month, every quarter, and building trust with management. And those investors have made a lot of money. And there's other investors that are going all with the numbers and ignoring all the qualitative and just show me the money in the earnings, and I'm looking at nothing but the numbers. And those are very successful investors. I tend to do a bit of both, and it's hard to discuss even on this podcast because it almost comes down to who you are as a person, who the company is, right? Is this a company that you need to speak to management with? Is this a company that you need some color on what they're doing to figure out whether you want to invest or not? Or is this a company that's kind of all just nothing anyway? And what I really need to see is the earnings and the numbers. So every company is different, and that's probably a more complicated strategy where, it's experience, it's getting to know who you are. And that for me comes down to, again, like for investors that are new to this space, I typically say, I won't give you a stock pick. What I'm going to tell you to do is pick a stock strategy. And when you buy a stock, write down why you bought it. When you sell a stock, write down why you sold it. And over time, go back and look at that and see, honestly look at it and think to yourself, was I right? Was I wrong? Why was I right? Why was I wrong? And look at your investing strategy and build an investing strategy that kind of works for you. And right. You can go to Paul Andreola, you can go to Ian Castle, you can go to yourself, you could pick your favorite microcap investors and steal bits and pieces of what you think is best, and that's probably what's going to work for you. But then you have to test it. And if it doesn't work for you, then throw it out. And if it does work for you, then keep it and just keep building that strategy.
Absolutely. No, it's the only way you build conviction. That was my number one mistake I made early on in my career, was investing in stocks that I just like, I respect that investor, I'm going to buy that stock. And, I made money in like one of them, but at the end of the day, it was never comfortable. I was just sitting there just like, stock up today. Is it up today? And then I sold it because I saw it was up like 3 cents. I'm like, okay, I'm good. And because I couldn't stand it anymore. But, you just inspired a question that I actually don't think I've asked anybody on here. And it has to do with kind of the blend of the qualitative and the quantitative. You're looking at the numbers, going through the story, going through your deep dive due diligence, and you're starting to say, okay, you know what? I'm putting together my thesis. And, there's some people that might say, this is starting to kind of make sense, but I have some questions for management, maybe to complete my thesis. I'd like to take that one where I want to call management, talk to them and ask these questions. Do you sometimes also think to yourself, I'm putting together that thesis, but this is still kind of confusing to me. It would make sense for me to talk to management, but like, why should I need to talk to management right now when this should make more sense? Have you ever come into a situation like that where it just completely turned you off, mostly because it was like, all right, most of this makes sense, but this one thing doesn't? I could talk to management, but is it really worth it for me to actually talk to management when this should be more clear?
Well, yeah. I mean, again, for me, back to like, I'd have to go to my investing thesis. So again,
sure,
it's just my strategy, and it's different.
We're digging into your strategy. No, forget.
I typically break out like larger capital investors versus smaller capital investors.
Sure.
If you're a larger capital investor, if you're putting $100,000 into a stock, and I know many people that do, 100,000, 250,000 into a microcap stock that could go to zero. That's so much money that if it starts dropping in price, you can't even sell because you're going to crash the share price further. Like that all needs to be done before you probably ever put $1 into that.
Of course.
And that's one of the things with microcap investors I talk about. We have to make sure we're communicating the same language, because I've seen that lots of times where, a large, older person has been here, lots wealthy money, tons of money. This stock can go to zero and it's not going to even cause them a minute of lost sleep, is giving advice to the 25-year-old investor that's got $1,000 to put in the market. That's their last $1,000. Like it's hard to have those conversations. So, for larger investors, absolutely do all that. Go to their site and go check out their site. I think that's hugely important. The problem is for some smaller capital investors, and that again gets down into the benefits of being a small retail investor in microcap stocks and our advantages, our superpowers, so to speak, right? Is that my strategy is typically I'll research a stock, I'll build a thesis, and then I'll buy just a little bit, right? Just a little bit, just to make sure that I own it, that I'm looking at it, and that I want to research it further. And then I go through the process of additional research. So input comes in, whether that's a news release, press release, earnings, annual earnings, quarterly earnings, whatever it is, I take that input, and with every input that comes in, I make a decision. Well, do I want to buy more? Is it making me buy more? Or is they have to earn my money? Or do I want to hold? Or do I want to sell? Through that process, if it comes up where I don't understand this press release, I don't understand what's in these earnings, as I'm constantly evaluating those inputs, and I say, well, I need to understand this better, that's when I would suggest to call management and have a discussion. But again, that's from the more not putting $150,000 into a single stock. That's for the person putting $1,000 into a single stock. And it's almost a different conversation to have.
Absolutely. So I have one specific question. When I was going through, thinking about the Cancelim strategy and prep for today, and I was putting together some questions on this. And I was digging into the A of Cancelim, which is about annual earnings growth. And one question I had is for you: how should any investor interpret strong annual earnings if, let's say, recent quarterly results have been declining?
Well, it depends, because again, when it comes down to my strategy, I build a thesis, and then annual earnings is just one input. That now it's a more important input, mostly because it's audited. And with microcap stocks, we've all known microcap stocks. Some of them haven't been the most honest, and audited earnings can give us a better, conviction that this has been looked at by somebody else, and these earnings are accurate. But for me, annual earnings are just one input. So for me, it's proving out my thesis. I mean, if my thesis was the stock is going to be lumpy and they had some bad quarters, but overall I'm looking at the annual growth, that's what I'm concerned about, my thesis. And they're proving that out, and they did have some bad quarters, and they did then have good annual earnings. Is that more important to me? It's actually more important to me because it's proving me correct. It's proving my thesis. Right? I would almost be more, say they weren't lumpy for some reason. They just had spectacular quarters. I would almost be more concerned, because I'd have to go, that's one of those times where I might have to call management and be like, my thesis was that you guys are going to be lumpy and you guys just crushed it. What happened? Like, give me some color around this, right? So typically for me, what's important is what is the best evidence I have, and there's different levels of evidence. Annual reported audited earnings are good evidence. And there's weaker evidence, which is your press releases, your news releases, or maybe something you find online. But there's different levels of evidence that I use that are either proving my thesis correct or proving my thesis wrong. And once my thesis gets proven wrong, I'm either, that's what I'm looking at. I either reevaluate my thesis. Am I holding while I reevaluate? Am I selling while I reevaluate? Or is my thesis broken? And that's another thing with microcap investors is, being humble enough and just realizing I was wrong, right? And I got to get out. So that's what I'm looking at. Is it proving me right or not? I like being right.
I think most of us love being right. It's all, you can learn a lot from being wrong, for sure. But being right's pretty nice too. But love to get an example. I mean, again, I told you offline, this is not like a give me a best stock pick, anything like that. But in terms of your strategy and giving a good, I guess you'd say, just an anecdote of how, you distill from your 100 to your 20 to then your 4 to maybe that 1. What has been maybe a past example, maybe you're not in the stock anymore, or even a current one where, you did your screen, you had your 20, started building the thesis, it became the 4, and then started building even more, and then it became maybe your top 1 or 2.
Yeah. That's pretty easy. I did a live stream yesterday on NTG Clarity Networks. And I mean, full disclosure, I currently own it. I'm currently trimming it right now a little bit. But I mean, that stock is up. It's an 18Xer from when I first introduced it on my channel in like January of 2024. It's up something like 1,800%. So if you're watching this, just pause, open up NTG Clarity Networks. It's the ticker NCI.V.
And for full disclosure, we're recording this on Tuesday, May 27, 2025. So
right.
You have a timestamp as well.
Yeah. And this company, it's interesting. Ian Castle put out a quote a while ago where he said, when I first introduce a stock, everybody's going to hate it. And then 3 months later, everybody's going to like it a little more. And then 6 months later, everybody's going to love it. And, it goes through this process. And that was the same thing, because when I introduced it, it was at 3 cents. I have the receipts from my videos. It was at 3 cents. It did a reverse split to about 15 cents, and now it's $2.85 or whatever. So it's up significantly. But when I introduced it, everybody hated it. And I don't think people understand, like when I make a YouTube video, it's probably about like 3 to 4 hours for me to actually make a video. We're talking like scripting, recording, editing, publishing, thumbnail, text. On top of that, 3 to 4 hours of research on the stock. So it's about 6 to 8 hours for me to make a YouTube video if you include the research. I'm not doing that for my health. Right? This is obviously a stock. I'm not saying they're all going to be winners. I just present them to you for further research. But this is obviously a stock that I think has significant potential to do well in the future. I presented it at 15 cents. Everybody hated it. They're in the Kingdom of Saudi Arabia is where they collect their revenue from. The Middle East is too risky, and Egypt is where their workforce is, and it's too risky. And it starts going up, and all of a sudden, people start to like it more as it goes up. But if you're looking at the chart, and this is why I talk about how it's not about stock picking, it's 80% of it is about strategy. I actually know people that lost money on NTG Clarity Networks. It's an 18Xer. It's up 1,800%. These microcaps are extremely volatile. It went up to like 60 cents, it dropped to 40. It went up to like $1.20, it dropped to 80. It went up to $1.90, it dropped to $1. It went up to $2.20, it dropped to $1.50. And I know people out there bought the tops because everybody was excited about it, and they get Can Slim wrong. They think, well, if everybody's excited about it, let's do Can Slim and let's buy the top. And then when it drops, they're like, well, I don't know why it's dropping. I don't have enough conviction. I didn't do enough research. I'm going to sell. So we have a stock that's up 18x, and there's people that lost money on NTG Clarity Networks. So again, for me, it was building the thesis. Right at the start, it was like, yeah, there's some risk, but this was something more along the lines of numbers. They were growing revenue. They were hitting the profitability inflection point. I put out a video on them. I had questions because I didn't understand what they were doing in Saudi Arabia. You'll see on my YouTube channel, if you go through the history of videos, that's when I started interviewing Adam Zaghloul from the company. Like, hey, I'm looking at your numbers. They're good. Help me understand the numbers, because you're operating in an area. I'm in Canada. I don't know anything about Egypt. I don't know anything about Saudi Arabia. That's something you need to tell me about. That's something I need to go talk to management about. And you'll see through my videos, they progressed from where I thought they were probably like a 1-star stock to a 2.5-star stock to a 3.5-star stock. And by the time I put a video out saying they're like a 3.5-star stock out of 5, they were at 45 cents Canadian, and people were selling because they bought at 15. They've doubled their money, and I'm just going to get out. I've made my 2x and I'm out of here. You can see that my thesis on that one is they're continuing to grow. They're continuing to get profitability. KSA 30 plan, their strategy is still working. They're still executing. They're still saying the right things. My thesis was a buy and hold. Now, that's not that way for every stock. You have to look at each one individually. And it's funny because if you look at the chart, you could just draw a straight line where people who bought at the bottom and are holding to until today made an absolute crazy amount of money. But there's also people that made more than that because they bought on the dips. They did their research. They had conviction. Maybe they trimmed at the tops, bought at the dips. They made even more money. But there's always people out there that bought at the top and sold at the bottom and lost money. So NTG Clarity, like I'm thinking of doing a case study on them at some point and going through social media and pulling out all the comments of people who were talking negatively, or I sold, or it's time to get out, and other people who were talking about I'm buying, and putting that on the map of where the share price was and seeing what we can learn from that. Because I think there's a lot to learn from that stock, where you get a winner and it's still it's not a winner for everybody. It's a lot of it is about our strategy, and that's one of those ones where it wasn't about my strategy worked, my thesis was right, and they kept proving my thesis to be correct. And there's at no point where it was the thesis ever broken.
Absolutely. No, I appreciate that example. Actually, NTG presented at our conference in Vegas, so did an interview with them as well on Planet MicroCap. So it'll be for anybody that want to check that out as well. Full disclosure, not a shareholder. When you were putting your initial thesis together, where it got to buy and hold, what would you say was the main catalyst when you were really looking through NTG that you're like, all right, now everything has become clear. This actually completes my thesis and why I feel the way I do about this company.
That's a good question. I don't know if my thesis is ever really complete, because again, you build the thesis and then the inputs come in, the evidence comes in, and you evaluate your thesis over and over. It's tough and that's one of the things I would question people, because I do see a lot of buy and hold forever types. And some of them aren't wrong, and some of those microcap investors are the larger capital investors, and that's how they have to invest. But one of the things that smaller retail investors have as an advantage, as a superpower, is flexibility. So, a lot of people might say, well, that's trading. Not necessarily that it is trading. It's, you're still interested in the same quality company. You're interested in the same stock. You might still own the same stock as a larger capital buy and hold forever type. But when you're going through that thesis for smaller capital investors, typically, like a lot of the investing groups will say, you buy, it's all about position sizing, right? You buy a fund size, you buy a spec size position, you buy with an amount of money that if you're wrong, if your thesis is wrong, you can afford to lose that amount of money. And then every time an input comes along, again, do I want to buy more? Do I want to hold? Do I want to sell? And every time they do something that I like and proves my thesis, I just kept buying more and more and more and more. There is maybe a bit of misconception from the larger investors that it's like, well, I do all this research, I buy 100% of my position, I hold forever, and when I retire or 6 months before I die, I'm going to sell all my stocks and I'm going to be fabulously wealthy. That's not. It is an okay way for some investors, but for most, our advantage is flexibility. So for me, I'm looking at, are the numbers where I expected them to be as per my thesis? Well, that's the quantitative side. As well, on the qualitative side, and probably more important, is the company doing what they said they were going to do? Microcap stocks aren't going to be perfect. None of them are perfect. They all have problems, and that's okay. But when management comes out and says, we have a problem, this is the problem, this is how we plan on fixing it, great. Maybe it goes down for a while and I choose not to sell. Maybe, it's not great for the company, but I can at least say they're being honest. They're being, they're building trust with me. If I believe them on this, and they're being honest about this, I can believe them when they say potentially that 2026 is going to be a good year. So it's building out that earnings, that quantitative execution, where they're improving growth, improving profitability, not doing anything funny in the earnings, as well as qualitatively, like are they doing what they said they're going to do?
I think that's probably one of the best points you've made. It's just at the end of the day, it's a trust game too, especially in microcaps. You do a combination of quantitative and then also doing the qualitative, talking to management. But if you're going to play the qualitative game and you are going to be talking to management, trust. You don't actually necessarily have to talk to management either. You can just see what they say in their earnings reports or go through the 10K. Maj does it all the time, the info ARB stuff, they can just, say they're going to do something and then, they come out with their next K or Q and they didn't. And it's like, okay, well, that saved me 20 minutes talking to management because they just, they answered my question for me. They suck, or they're not honest.
Planet MicroCap has CEO interviews a lot of the time, right?
Yeah, that too. Yeah, that too, of course.
Yeah.
But yeah, so that's a really good point. Another question I have for you, and this question I ask everybody on here. What would you say has been an investing experience in microcaps that changed your career the most? I'm not talking about the switch from, looking at bad stocks or showcasing bad stocks versus showcasing good stocks, but one where personally you were getting into it, you thought this was a really good idea and either worked out for the better and that nobody else really saw. I mean, you kind of already told that story with NTG, but maybe on the flip side, you're like, I thought this one actually looked, it had all the metrics I was kind of looking for, kind of checked all the boxes, but, for one reason or another, it didn't work out.
I think, if we're talking about a stock specifically, one of the learnings...
You don't have to name a name if you don't want to. You
Sure,
can
yeah.
if you want it.
Look, here's one of the things that I love about microcap stocks. None of us are perfect. We're always learning. I'm learning every year. Every year I'll make a mistake somewhere and you learn from it, right? Recently, I think, was it last year or this year, had a stock and it was a high risk. It was a SPAC stock and everything else. And their auditor was not I don't know what word I should use here without getting sued, right? But maybe wasn't accurate in their audits of this company, got exposed and learned from that. So basically, those you talked about, annual earnings, are they important? I talk about best evidence and annual audited earnings being best evidence. This was a case where my best evidence, which was the annual audited earnings, was garbage thanks to the company potentially not being legit, but also not hiring an auditor that was legit. So you learn over the years. One of the things that I've added to my research is not only like a history check of management now, going back through management's histories, including as many members of management as I can get, going back through their history, but also I look at their auditors. I look at the history of their auditors and what kind of record they have and how long they've been around for. And when you're putting a lot of money into a tiny little stock, you can find some things along those ways, right? That's more qualitatively, or as along the lines of a stock. Professionally, I think what's changed me the most has been more embracing these microcap communities, and I hope more microcap investors do that. Where I think when I first started out in this game, I was very alone. I wasn't even on social media until I decided to start that channel in 2022. I had no Twitter account, I had no Facebook account, I had no YouTube account. I was off social media. And when I first started, it was kind of like a me against the world mentality. And I think a lot of microcap investors have that, where you're going to find the best stocks and you're going to do this on your own. And I encourage more people, like, it's easier to get through the losses and to celebrate the wins and to keep going and motivate yourself by joining and pairing with some of these, whichever one you prefer, with some of these microcap groups, and just joining more of a community. It's not competition. We're all in this together. Our goal is to get discovery by institutions and people that have way more money than your average retail investor. So there's no competition. So that's embracing that and finding people that you can talk to and both agree with and disagree with is a huge another advantage that we have as retail investors that I think more people should embrace.
Absolutely. So that normally would be a great place to end it, but I also wanted to have one final question for you as an ode. Uh-oh. It's more of an ode to your previous channel. If we were to put a bow on it, or I guess what's the word in most magazines, our obituary to that channel in a sense. Yeah. Instead, obviously, we're not going to talk about individual names, but from your collective experience in exposing some of these companies that just weren't good companies or weren't good stocks necessarily, what would you say were some of the common red flags to watch for when you were looking at some of these stocks that maybe some folks might want to hear about here?
Follow the money and follow the shares. So typically, companies they have three types of capital, right? They have debt, which is hard to manipulate because that's usually through some type of bank. But then they also have, some form of share capital, whether that's through share dilution and financings, or whether that's through some form of like convertible debenture that can be converted to shares. And then finally, they have their cash. And so if you track that money and you track those shares, who's making money with the company's cash and with the company's share capital. If it's retail investors, great, because there are companies that are trying really hard and they're just struggling, and that's not a bad company, right? That's a good, honest company that's just facing some headwinds, and you have to be careful in putting those companies in a bucket with the bad ones. The truly bad ones, you go track the money. And I mean, I've found cases where they're using, a financer that's doing at the market share offerings, and they're getting it at a 25% discount to the market or whatever. So the person is selling shares into the market for 20% lower than retail's buying it, and they were taking that money and opening up Pilates studios in Phoenix. Right? They were making money hand over fist. They were making cash and building their business, and they were making that by basically diluting the heck out of retail investors. And retail over the years had lost money in owning the shares. They'd lost money every week as the company's diluting their ownership of the company, and it was just, and the cash was going to the CEO through performance bonuses, RSUs, PSUs. So share capital was going out the door to a financier, and cash capital was going out the door to the management, and people getting screwed in this case are always retail investors. That's a problem.
1000%. Cameron, this was phenomenal. Where can our audience go and find more information on Commonsense Investing, to subscribe to your Substack, as well as to follow you on social media?
Everything's easy now. www.commonsenseinvesting.ca, and I've tried to put everything on there, all my different links, and just it'll take you to YouTube, Substack, wherever you want to go. I have free and paid options.
Very cool. Well, Cameron, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. And I look forward to our next update.